Okay, overnight in Japan, Tokyo's benchmark index suffered its worst one-day slide since the September 11th attacks. The Nikkei plunged more than 5%. That's 16.5% below its high for the year. Here to tell us how investors should be playing the global markets is Robert Levitt. He's president of Levitt Capital Management. And he is joining us from, of all places, Paris. Good to see you, Robert.
Hi, Trish. How are you?
Good, thank you. So I want to start by asking you, how are you interpreting this news of what happened overnight in Japan?
Well, I think that what happened in Japan, when you looked at Hong Kong, when I woke up this morning, there were lots of stocks in Hong Kong that were down over 20%. So you had a real panic. People were throwing everything out. And this is not a market that we really want to mess with. We want really to be on the sidelines here. We've tried to hedge our portfolios as best we can to not play in this kind of water.
Now, you're looking at the entire universe here. I mean, it's not just Asia. You're right there in Paris looking at European markets and emerging markets as well. So let's try and dissect this a little bit and talk about where the pockets of opportunities are, if there are any in this world as a whole. Okay. Where are you putting your money?
Well, the Chinese market hit a record high this week. The Nigerian market hit a record high this week. Markets that don't have a lot of foreign investors were doing quite well. But what we're going to look for is a continued decline in the U.S., which will lead to a decline in the dollar. So people who are putting money in U.S. dollar money markets might get whipsawed. Once the dollar starts to fall, we're going to see the price of gold rise, and we're going to look at opportunities like in Hong Kong, which is lower interest rates, U.S. dollar based. You'll see Hong Kong real estate doing very well. So we're waiting for opportunities. Right now, we're trying to keep our ammunition as best we can dry because it's been very painful.
Okay, I want to talk about some of these other emerging markets out there. Nigeria, of course, being one that you mentioned, is something that you like right now?
Well, Nigerian market has risen a lot. It's independent. It has a very low correlation with the rest of the globe. So you're not seeing people sell it off in a panic because a lot of the Nigerian investors, I bet they're not even aware of what happened in the Nikkei last night or in Hong Kong or other markets around the world.
So there's some plus to that. I want to bring in right now, we've got both our market contributors that are here today. We've got Peter Schiff, also Ned Riley. Peter, I mean, when we look at this sort of universe of where to invest, and people are nervous right now about the U.S., where are the other opportunities out there?
People should be nervous about the U.S. They're not nervous enough. But I agree on the foreign markets. The only caveat is I'm advising my clients to buy now, to add to their positions abroad. I think this is a panic abroad. You have to remember.
But are you talking, when you say abroad, I mean, are we talking emerging markets or are we talking, European
I'm mainly
markets?
in the developed. Yeah, I'm mainly in the developed markets in Europe, but I do a lot in Hong Kong, a lot in Singapore. But you have to remember, what's happening is foreign markets are falling because of problems in America, because of losses on loans they've made to Americans who are now too broke to repay those loans. It's an American problem. There's a short-term disruption in foreign markets. It's a great buying opportunity. Foreign markets are going to recover. The U.S. economy is going to tank. But I
mean, is this sort of a short-term look here? Because if you're saying that the problems in the U.S. are going to, catch up with problems in developing markets overseas,
no, they're not.
Then that's an issue.
Remember, Ned says I'm talking about the end of the world. I'm not. I'm talking about the end of America's phony economy. The rest of the world is going to benefit when they no longer have to support 300 million over-consuming, under-saving Americans.
Okay,
we are a drag
I want to get Ned in here. He's saying he says that you say it's the end of the world. I mean, what do you think?
It's not.
Other pockets of opportunity out there besides the U.S., Ned?
I think there are, but I'll tell you the truth, I still am much more optimistic about the U.S. We have trailed the foreign markets for quite a period of time. I agree with Peter. There's a lot of good opportunity overseas. But the bottom line is we are going to be the first to cut interest rates. We have been the first, obviously, to add some more liquidity. The other issue, too, is, Peter, you're mentioning problems we already know about. I mean, give me some problems that are going to hit the United States. You're going to talk about bankruptcies of the major banks or something to get me scared?
Well, what's
I'm
going
not
to
scared
happen,
about that.
Ned,
you're not scared
rates,
about that? Not scared about that at all? That potentially one bank could get stuck with a lot of
not the major
loans
money
on its
center
books it
banks.
doesn't want?
Look, let me tell you about the new problems that you're going to see. Look, you're going to see interest rates going sky high. You're going to see consumer prices go through the roof. The dollar's going to fall through the floor. We're going into a massive recession. You're going to see massive unemployment. Is that enough negatives for you?
Peter, you got a 2% inflation rate.
No, 2%.
Hold on. Peter.
2%? What, are you kidding me?
Hey, Peter.
Yeah?
Peter, walk me through the world in which interest rates go to 20%,
Yeah.
If consumer prices go to $5,000 an ounce for anything, and the world markets rally.
Yeah. Well, because
how can you be a bull, with all due respect, on global growth and global growth stories when the apocalypse is coming to America?
Okay, here's what's going to happen, right? When the U.S. dollar collapses and Americans can no longer afford to buy things, we become very poor. All that purchasing power is going to transfer abroad. Foreign currencies are going to surge. And all of a sudden, you're going to see an explosion of consumption by wealthy foreigners. So all the factories around the world, they're still going to produce products, except instead of sending them to America, they're going to enjoy them. And instead of wasting their savings on consumption, they're going to invest in their own products.
I like it in Italy. Italy's lovely.
Isn't it, Dylan?
Yeah.
Nice time nice place
cheap.
to go this time of year. All right. Hey, our thanks to Robert Levitt, president of Levitt Capital Management over there in Paris. Thanks so much for joining us. And, of course, we're going to have you guys stick around.
Thanks, Trish.
Dylan.
I told you the conversation was just getting started. Peter and Ned staying with us for the balance of the hour. Hopefully you will as well. We're about to go deeper into what you should do with your money stateside prior to Peter's apocalypse, just going into the weekend. What do you want to do going into the next couple of weeks here? We're going to hear from both a nicey floor trader here, how they're setting up, and a strategist. This, of course, the only place. Who else does it better? Who else takes the morning's information, takes a minute here, has a conversation? Who else is going to give you Peter Schiff and Ned Riley? This is CNBC, first in business worldwide.